Welcome to the Deep Dive. Today, we're really digging into a massive shift in global energy, India's huge increase in Russian oil imports, and crucially, what might happen if that suddenly stopped. I mean, think about this. Before the Ukraine conflict, Russian oil was, less than 1% of India's total imports? Now, for 2024-2025, we're talking 36% to 40%. Russia is their biggest supplier. It's quite a change.
It really is an astonishing transformation, and our mission today is to unpack what that all means, the economics, the logistics, the geopolitics of it all. We want to explore, what are the real benefits? What are the hurdles? And what if this major trade link just vanished? The implications might surprise you.
The numbers themselves really paint a picture. Russian oil going to India just exploded from maybe 100,000 barrels per day back in 2021, retail over 1.7 million barrels per day in 2024. It even hit like 1.95 million in May 2025. Financially, that's huge too. For India's fiscal year 24-25, which ends March 31st, we're looking at $53 billion in petroleum imports from Russia, out of about $67 billion in total trade.
Yeah, and it's important to understand this isn't just India grabbing cheap oil opportunistically. It looks like a real strategic shift. It's driven by energy security, and basic economic pragmatism, keeping the lights on and the economy growing with affordable energy. That's become, as they say, a non-negotiable national priority.
But it's interesting, the actual financial benefit for India. Well, it's debated. You've got CLSA estimating maybe just $1 to $2.5 billion a year saved. They point to falling discounts on the oil, plus higher shipping and insurance costs. But then other analysts are talking savings over $17 billion. That's a massive difference.
Right, and that's the real tension. Is it a huge windfall mainly for, say, big private refiners like Reliance? Or is it more of a strategic move for the whole country? By absorbing that Russian oil, India arguably helped prevent global prices from spiking even higher, which benefits everyone indirectly.
So it's this kind of duality that might explain why the numbers are all over the place and why India is sticking to its guns on this.
Exactly. It suggests they view it as strategically vital, regardless of how the direct savings break down.
Okay, so beyond the money, actually moving this oil, with all the Western sanctions, that's a whole different challenge, right? Logistically and financially?
Yeah.
India's relying a lot on what's called the shadow fleet for shipping. For you listening, think older tankers, maybe operating outside the normal Western insurance regulations, a kind of parallel system.
Mm-hmm. And the money side is just as complex. Reports suggest over 90% of the trade is settled in Indian rupees and Russian rubles. This has meant Russia has ended up holding billions in rupees in Indian banks, which aren't easily convertible. They apparently even asked for payment in Chinese yuan at one point, but India refused.
Ah, interesting.
Yeah, and a key move here was India's central bank, the RBI, easing rules for these special rupee vostro accounts, basically, rupee accounts held by foreign banks in India. They allowed Russia to invest those rupees in Indian government bonds. It creates a sort of yield-bearing parking lot for Russia's cash.
So India's actively helping build a new financial pathway here.
Well, it certainly looks like practical collaboration fitting into that broader BRICS goal, Brazil, Russia, India, China, South Africa, of finding alternatives to the U.S. dollar for trade settlement.
Okay, so let's pivot. What if this whole trade did stop? What are the immediate consequences? For India first.
Pretty severe, according to estimates. SBI, the State Bank of India, projected maybe a $9 billion jump in India's import bill for the next fiscal year, FY26. That would likely mean higher inflation at home and definitely put a strain on the government budget, especially since they try to cap fuel prices for consumers.
And replacing that volume. 1.7 million barrels a day. That sounds incredibly hard.
It really is. I mean, look at their other suppliers. Iraq sends about 1 million BPD. The U.S. only around 158,000 BPD. Finding that much oil elsewhere quickly, that would almost certainly push global prices up for everybody.
And what about Russia? Losing India would hurt them badly too, wouldn't it?
Oh, absolutely. A significant financial blow. India became Russia's second biggest fossil fuel customer in 2024. We mentioned that $53 billion figure. Losing that revenue would hit their budget hard, especially when forecasts are already down like 25%.
So where would that Russian oil go? China.
That's the most likely destination, yeah. China's already their biggest buyer. But pushing even more oil towards China would probably mean even deeper discounts for Russia. It creates a different kind of problem for Moscow, increased reliance, maybe even vulnerability towards Beijing.
Right, and the global market reaction.
Intense. Industry folks warn crude prices could spike, maybe to $90 or $100 a barrel. Some extreme forecasts even mention $200. It would completely flip expectations of an oil surplus maybe coming in late 2025 or 2026. And it could accelerate this trend towards a balkanization of the oil market, splitting into politically aligned trading blocs.
And this all plays into the diplomatic side, too, like the friction with the U.S. over potential tariffs.
Exactly. The U.S. has talked about punitive tariffs, 25% on some Indian exports, maybe even on the Russian oil imports themselves. India's pushed back hard, calling it unjustified and citing their sovereign right to energy security.
It's a tricky situation.
It is. And you also have this European paradox, as some call it. The EU supports sanctions, but some members, like Hungary and Slovakia, still import Russian gas via pipeline. That gives India a bit of diplomatic cover, against claims of double standards. And as we touched on, this whole rupee-ruble trade becomes a real-world test case for that BRICS de-dollarization push. U.S. pressure might actually be encouraging it.
So wrapping this up, if this India-Russia oil trade were to stop, the fallout sounds pretty widespread.
Unavoidably so. You've got serious trade-offs. For India, it's a big hit to their economy and energy security. For Russia, a major financial loss and deeper dependence on China. And for the rest of the world, likely higher oil prices and a more fragmented, politically divided energy market.
It's a fascinating, complex picture with huge stakes. And here's something to think about. While this Russian oil is clearly vital for India today, their long-term goal is energy independence by 2047. They're investing massively in renewables. So is this deep reliance on Russia just a temporary, pragmatic bridge fuel on the way to that greener, more self-reliant future? Or is it actually part of a more lasting shift in global energy alliances? Something to chew on after this deep dive.